Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Monday, 29th of April. Today, we don't have any big important economic data. We only got the Dallas Fed Manufacturing Index, and it's still in the negative. But the most important thing, I think, for today was the 3-month and the 6-month bill auction. That is, it's still showing the same kind of high interest, high yield. So no trust for other funds to really invest in other things that were not yields. So basically, everyone is waiting for Wednesday, ISM manufacturing PMI, JOLTS job openings, and also the Fed interest rate decision and Jerome Powell's press conference. So today, no news Monday, tomorrow, employment, house sector, and Case-Shiller data. So it's basically today, it's basically price action. And price action, if you pay attention to what I told you on my weekly recap on Saturday, you would notice today that the main reason I was super patient is because we are in the middle of these two fair value gaps. This is an inverse and this is a bullish fair value gap. We are in the middle. So I was watching basically this pivot and this liquidity up here. If I put my notes there, as you can see, I have the 50% retracement that we tapped on Friday pretty beautifully in that range, and we spiked through all the day until today. And this is in the context of liquidity being went through in the 1-hour chart on Thursday. On Friday, tap 50% retracement and now move higher. And I mean, markets are super visual. And this kind of inverse fair value gap is going to be tapped sooner or later. That doesn't mean that we are going to continue higher. We don't know until we enter that zone. We might reject, but at least we know that the liquidity grab is going to happen. And that's what caused me today to have really a long bias after a big manipulation move on liquidity grab from Friday. That happened right into the open for both sides. I was looking overnight. I didn't take any trade in the overnight. I didn't trade the open. Luckily, because this kind of move higher to then dump pretty heavily all these people that were long during the overnight were just liquidity. And we tapped, by the way, we did a gap during the open in both Nasdaq and the ES. We went through the gap and then we tapped this liquidity on Friday. So once we did that, I was okay, let's see that retracement. We got this bullish fair value gap. We have from this high to low of day, the golden pocket being tapped into an inverse fair value gap. This is a textbook pattern of don't follow nor chase the bounce. And then slowly but surely, we've been building this liquidity. I have it right here and in this channel. And I know you notice this SMT, this divergence, the Nasdaq held the low of day with a higher low up here. But look at the ES. The ES made a new low of day and then bounced. This is one of the stronger signals for a long on the divergent equity, in this case, the Nasdaq. And look at where we stopped and we bounce. We bounce from the fair value gap that we left into the push into the first 1 hour of trading. So pretty bullish. And I decided to take this opportunity here with the stop, just a scalp, to put some skin on the game and see how the market reacted. We got a nice push. We pulled back. That was a beautiful entry if you missed the one down here. And then we left another fair value gap and we started grinding until here. My target was this liquidity up here for a risk-reward ratio of 5.52, risking 11 points for 60. And just a couple of minutes ago, I just got filled with only one contract today, letting it run after these big swings. I was quite nervous. My stop on profit was up here for basically 1-to-1 initial risk reward ratio. And luckily, we held, we put a higher low, we kept the fair value gap intact, and then we squeezed the rest of the shorts. Sorry. So we are now entering a zone in which if we extend the inverse, we are now holding above the inverse fair value gap. And if I were short, I would just take profits because looks like the algos are doing its part. High of day up here and the liquidity beyond that at basically 17,968 to 988. It can happen because look at all these weeks. This is the 15-minute chart. Look at all these weeks. Huge buy-in today. And it's not the best price action of the world because basically it's non-news Monday and shorts are still liking the setup. But to me, today it's bullish on the background, in part because Tesla is 15% in the green because China approved the FSD test of Tesla in that country. And also Apple ahead of earnings this week is 3.20. Despite the fact that Google is pretty bad in the red, Meta is pretty damn in the red, Microsoft is pretty bad in the red, despite small caps dropping also, the Nasdaq is still trying to squeeze shorts. So if you get caught in today's squeeze, slowly burning your profits since the open, that's usually what happens in non-news Mondays. Now that we took the liquidity here, this is just too risky. I would just take profit both long or shorts because we are entering a zone of pretty high risk and volatility, and we can just be here until the close. It's just a matter of what the big money with algos want. What else we can review? The dollar, it's basically quite weak today because Japan announced that the yen is going to be intervened, the forex market is going to be tapped, so the dollar is weakening a lot. Yields are in the red today. Let's see the daily. The daily is still inside a bullish candle, so it's not bearish, it's just in the red today, pulling back a bit. The 10-year is doing the same. It's basically going outside of this bullish candle to the downside. It's a little bit more weaker than the other one, but both are holding higher. And interest rate futures for September continue holding at 5.2. So no rate cut on September. This is already priced in. And the fact that the Nasdaq is slowly grinding higher today, not giving opportunity for both, not giving easy opportunities for both bonds, longs and shorts, it's quite telling. So my recommendation, if you didn't take a lower entry, if you just are chasing or have a bad entry, just take those gains. If you were short since the open and you didn't take profits, close that trade because from now until the close is going to be ultra choppy. I'm trust me, I'm based on experience. When we take the big target of the day, it's just, I mean, the high of the day might be a target, but it's super risky. This zone is just chop. And as you can see on the rest of the week, we are waiting for news on Wednesday. So today is just a range day, a little bit of chop, a little bit of pull. We are holding levels. We are not letting the shorts get confident, but at the same time, bulls have to take care also of their position because we are not either going through a big resistance level. So we are just waiting for Tuesday, more info on housing sector, more info on employment cost, on case sealer, consumer confidence, LPMI. Let the data drive your sentiment. And on Wednesday, more data. Mortgage rates, global manufacturing, JOLTS, PMI. I mean, there's a lot of stuff this week. And earnings. So big earnings tomorrow after the close, Amazon, AMD, and the big one, Apple on Thursday. I mean, we just have to be patient. Be patient, be disciplined. If you are green, congratulations. If you are red, don't worry. There will be more days. Absolutely. So don't ruin your week just on Monday, because there's plenty of news, plenty of earnings, and there will be plenty of opportunities to just take your positions. So just take it easy today. I got my trade, I got my profits, 1,200 bucks, 1,200 more or less, 60 points. That's pretty good to start the week with a nice divergence on the Nasdaq. And that's all I need to start the week on a good shape. And I will continue to be disciplined, patient, and managing my risk, because that's what the experienced and professional traders do. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day. And if you can check out my weekly recap on Saturday, I strongly recommend doing so. I cover every single day of the week, every single bit of data, earnings, technical analysis, other markets, for you to have some kind of technical analysis from other people, experienced people, and also learn other markets. I go through other markets to find our edge to trade the Nasdaq and the equities. And pretty interesting videos. So if you never check those out, just go ahead and do so. You won't be disappointed. And remember, discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.